Good morning, ladies and gentlemen. Today is Wednesday, May 25th, 2022, and this coming weekend is Memorial Day weekend, which kicks off summer. And as you know, the market's been acting pretty rough lately, and let's see, I think it's down seven weeks. Yeah, it's been down closed down 7 weeks in a row. The S&P 500 has, and that's about pushing the limit. So I would suspect that we'll probably end up with an up week, although it's starting off kind of looking either way, but we'll just have to see. I would guess that market's kind of due for an oversold rally. Of course, everybody's been literally for the past 4 or 5 weeks in a row. Everyone, it seems the consensus has been calling for an oversold rally, and it seems like the sellers just step in on every rally. So we'll just have to see. And of course, we just go by what the charts look like. Speaking of which, I decided to start off today with my main sort of go-to chart of the S&P 500 on the weekly time frame, and it's about as simple as this, right? As you recall, back over here, this was basically the primary uptrend line attached, the trend line attached to the lowest lows on this big long weekly uptrend from 2020 to the beginning of the year. And once that trend line broke, it's been all downhill since. And going into the year, it was a really it's a steep rising trend line, but it is what it is. And this is just good to start with. I always like to start off with the sort of longer term, bigger picture perspective. And this weekly chart gives a great picture of it. It's pretty simple. Simple as this. Simple technical analysis, couple trend lines, but once that trend line broke, then things started to unravel. And as you can see, this rally that happened in mid to late March here put in a nice sort of peak, obviously, to draw a downtrend line. And so I've been saying here for a while now that that's obviously the market can't go back to the highs without breaking that trend line. It's pretty extended to the downside as we speak from that trend line, but that's sort of the big picture trend line to keep an eye on. And as long as it's below that, then obviously we're in a downtrend, right? Real simple, uptrend, downtrend. And the most interesting thing that's happening right now is obviously inflation's running over 8%, and it's been building up, right? It was 5%, 7%, 8%. So the Fed's got to do something. Everybody's calling on the Fed, but and I started to talk about this or talking about it on CNBC right now. Now that the market is sold off significantly, right? The S&P actually entered what they call bear market territory back here. And so now all of a sudden, there's hints that the Fed tightening may not go as far as they originally said. What were they saying? Something crazy like 9, 10 rate hikes or whatever. But so far they've hiked what, a quarter point? I mean, and they're expected in the June meeting to hike 50 basis points, and then again in July, and now they're talking about pausing after that. So it'll be interesting to see. And anyway, it is what it is. Looking at things objectively here, the S&P is actually holding up relatively well compared to the average stock and compared to the Nasdaq. As long as I'm on a weekly chart, we might as well take a look at the Qs here. Yeah, the Qs, boy, look at all these down weeks here. I mean, it's even this week. So if you count them, right, one, two, three, four, five, six, 7 down weeks in a row for the S&P and the NASDAQ 100. NASDAQ 100 struggling here. And so today's what? So you got Wednesday, Thursday, and Friday, and then we head into a 3-day weekend. And it's always interesting to see how people are, I should say people, participants are positioned going into a 3-day weekend. That'll be interesting to see, but 8 weeks in a row down is one of the longest stretches. I mean, if you think about it, it's like anything that happens 7 weeks in a row, any sort of binary, like a spin of the roulette wheel landing on red or black. When you get the 7 reds in a row, you start to push the statistical envelope. You almost, if you flip the coin and it came up heads 7 times in a row, you would expect that tails would come up pretty soon. So, yeah, NASDAQ, not holding up so well, not nearly as well as the S&P 500. There's a couple things today at 1 o'clock, or not 1 o'clock, 2 o'clock. Go to my SPY daily chart here. Today at 2 o'clock, I believe the Fed minutes come out, and that'll be interesting to see what the market reaction is, because last Fed meeting, which is what these minutes will detail out, the last Fed meeting, the Fed was extremely hawkish. So they're kind of panicking now because they let the inflation genie out of the bottle and is really starting to hurt consumers, obviously. And price of gas is, the price of gas is $4.59 here, and it's higher other places. And so I think the average price of gas is up significantly. You've heard about diesel fuel prices and all that, and so everybody is starting to really be concerned about all these price increases, right? And so the Fed, who, the general consensus is that they overdid it during the pandemic, creating, something crazy. Like, I saw a statistic the other day, half the money in existence was created in the last few years or something like that. Like, they basically, some other statistic, like they created more money in, to their reaction to the pandemic than had been created in the first 250 years of the country or whatever. So, and anyway, so it's pretty basic economics. When the Fed creates all this money out of thin air, then the value of the existing money goes down, even though the dollar has been going up, which is sort of kind of an anomaly. But anyway, so we got rampant inflation, and the only way they can battle that is by tightening. And the thing that's most interesting to me, that'll be most interesting to see, is the fact that starting in June is when they actually begin to reduce their balance sheet. So that hasn't even started yet. I mean, they've raised interest rates a mere quarter point. You can see what the market's done, right? Okay, I'm on a daily chart here. Right here at about S&P 4500, SPY 450 is when Powell was speaking, and I mention this each week, but it's an important level on the chart. It's an important point to keep an eye on, because that's when Powell was extremely hawkish, and that's what kicked off this latest downtrend here, this latest down move. And market looks like it's trying, it looks like it's trying to consolidate in this area here. And of course, S&P 4000, SPY 400, that's the level to watch. That's the over-under right now. And of course, we're under it, right? But you can see these kind of spike low reversal bars. I like these better than candlesticks. I suppose candlesticks give you a little bit different view, but I sort of like the open, high, low, close bars. These little spike lows kind of give us, there's one back over there. That was a nice one, and then you got a rally off of it. But these sort of spike low reversals give the market some hope that at least you get some sort of a bounce. So, and it's hard to know because this one, let's see, this was, well, I guess this was last week and the week before, but you had that perfect pivot low, right? And you literally after the pivot low day, you had 3 days move higher, took out, some of the prior highs, but then right back down and made a lower low. And I'll tell you, it's going to be interesting to see what happens starting in June when the Fed begins to actually reduce their balance sheet. So that could be that could be the next shoe to drop. Bigger picture, I think that and I can't say if the market could spend some period of time rallying up. It's a long way back to that trend line, right? I would expect that there's resistance. I would expect that there's a lot of resistance right up here around 4100. That's going to be the first hurdle. I could draw like a little zone right there around 4100 on any sort of counter trend rally. We're obviously in a downtrend, right? The bigger picture is the downtrend, and then you've got a shorter term downtrend that's pretty oversold, quite honestly. I mean, if you think about it, this current downtrend basically started from up here a little over 4,600. So over and under is 4,000. And there's a couple things out there, right? All of a sudden, everyone's talking about will there or won't there be a recession? Obviously we're in a slowdown, and it's kind of funny because you get into these transition periods, and a lot of people come on CNBC and they're like, "Oh, the consumer's still strong. There's tons of cash on the sidelines. The consumer's doing okay, this and that." But um, so as you know, Target came out with earnings and just absolutely took a winger, which is incredible. When I look at some of these charts, let's see, go back. Yeah, there's Target. So, um, just amazing to see a stock gap down like that. Target, Walmart's got same sort of thing. These are a couple of retailers, obviously, that you would think let me look at Costco here. Yeah, Costco, same thing. So these retailers are obviously, feeling some pain, and that sort of doesn't bode too well for the health of the consumer. And if you think about it, with gas, say, 4.50 to $5 a gallon, people are going to cut back in other places. And I mean, I don't know if that's what that's reflecting, but inflation out of control, gas prices, are still at their highest levels, and as long as I can remember, maybe in forever. I don't know about inflation adjusted, but as far as nominal dollars, geez, I mean, and so people, I think, are going to cut back on some things. I don't know. Are they going to cut back on vacations, going out to restaurants? I know I've cut back on going out to restaurants because I can make a better meal at home myself for half the price. And so I've started doing that. But yeah, I think that the overall economy is going to be in sort of a predicament here because with these high gas prices, people start to feel that. There's like a certain level, and I used to say it was like $4. I remember saying this at some point in the past, thinking to myself, once gas gets over $4 a gallon, then people start thinking about not driving as much, I suppose. And now I think it's sort of $5. I know some places, California obviously and this and that, but I think if the price of gas actually hits the $5 point, then that will really put the brakes on discretionary travel and other things. People are going to cut back on, people are going to cut back on going to Starbucks, right? So instead of getting, Starbucks, which, by the way, like over the years, as long as I remember, I think I remember when Starbucks IPO'd, but over the years, this has always been one of those stocks that no matter what happens, it's always done extremely well. Let's look at a weekly chart. I mean, it's always bounced back, even from, look back here, and there's 2008, 2009, and it's always been a really one of those stocks that just continues to perform and grow in that and every setback. Look at the pandemic meltdown there. Incredible. Lost almost half its value, bounced back. But anyway, so, Starbucks is probably a reasonable bellwether for discretionary consumer spending. You can see how much that's down. It's a weekly chart. But so anyway, long story short, I'm not saying anything you don't already know, but the market itself is just it's a mess. I mean, it really is. Market's a mess, and of course, if you look at the sectors like technology, these spider sectors are kind of handy for the bigger picture stuff. And I got a real nice clean chart here without a bunch of junk on it. Just real nice sort of clean chart. So we'll see. We'll go to year to date and just look at a few of these. So let me squeeze that out a little bit more. So as you recall, the market basically, the S&P basically peaked out right at the beginning of the year. So I like to, starting at the beginning of the year and see how things are going is a pretty decent look for a lot of these. So there's your technology. Let's see, industrials. There's industrials. Yeah, pretty clear downtrend. Healthcare. Yeah, healthcare's got a little bit different pattern on it. Let's see, financials. Yeah, financials not holding up as well as you might expect. This communication services. This is sort of a new S&P sector. I think this is what like Google is in. In fact, I'm sure that's what it is. Some of they jiggered around some of the sectors, spiders or whatever, and so yeah, this is kind of like technology, very similar to technology. You can see this one's down significantly, right? It doesn't look so bad on the chart until you look at the scale. But the ones that have held up, obviously, energy. Energy has been the best performing sector, and it's the one where I think all the money is sort of hiding in energy. And quite frankly, I've been watching quite a few energy stocks waiting for some sort of waiting for some sort of a pullback. I have a bunch of energy stocks on my watch list, and I've just kind of been waiting for a swing trade pullback in some of them, and you're not getting a whole lot of them. You can get these. Let's look at XOP here. We've had a few like really quick. And by the way, XOP is is a real broad sort of oil and gas exploration and production. It's much broader than XLE, but so these like this 3-day sell-off and then bounce and another literally like 3-day sell-off has not produced what I would call a reasonable swing trade setup, unfortunately. and so let's see. I got a couple Oops. So when I go to these stocks on my watch list, yeah, there's some really nice looking charts in the energy sector. This one now back here, unfortunately, there was this weird sort. This was a great swing trade setup, and unfortunately, it didn't work out because we got sort of a premature rally out of this pattern. And but I mean, this is kind of what I'm talking about, what I'm looking for. Let me go back over here and just see if I can fix this. This is here we go. You can kind of see what happened over there, but I figured I would draw a trend line on it. So yeah, this little sort of premature breakout here, and it wasn't done consolidating, but so last December that was kind of, and unfortunately it just this is right around Christmas, New Year's, all that, but that's a pretty good setup right there. Like that's the kind of swing trade pullback that I'm looking for. And so since then, and this is just I'm just choosing a random stock here, but since then you've had these really quick, sharp sell-offs, and that's about it. You haven't had any sort of pattern that looked like that because that was a pretty significant sell-off. So let's see, I got some other ones on here. I got some other ones. Let's see. I got my charts are a little bit skewed now because I started drawing on them. But well, let me fix that. Let me go back and fix my chart. But yeah, there's a quite a few energy stocks, and a lot of them look very similar too. Um, Theoretically, that was a pretty decent sell down, and you had that pivot low, and now they're back to highs. And so you'll find some of them that look like that. But basically, the next pullback in energy, if there's a pullback in energy that lasts more than a few days, I think some of those have a lot of potential to set up. So, and also the same with materials. Let's see, XME. Well, metals and mining has had a pretty good pullback. These are stocks that are actually starting to set up now, and so we have a pending trade here in U.S. Steel. Now, this one I believe this could take a long time to sort of play out, right? You want to be a little bit patient with this. Basically, what's happening here is it's had its pullback, and now it's in sort of a consolidation phase, which could last for quite some time. And then we'll be looking for it to turn back up. And if you go back over here, you look at something like this little area right here is kind of similar to where we are now. It's kind of a steep sell-off, and then a consolidation phase, and then you start to turn back up, and you get this cup, right? So you guys have been around for a while, know that I like to visualize basically the space in between these cups, because everywhere you look, you see these big cupping patterns on the chart. And so when you get a sell down like that, you can almost visualize consolidation, and when it starts to turn back up, um, and it forms a cup, and then typically you look for a rally back up into a certain distance into it, depending on what it looks like. Another one, just look at a few of these metals and mining stocks. Here's Freeport-McMoRan, FCX, same sort of thing, big sell down, trying to consolidate. This one looks like it has some potential. I would say, well, there's a 200-day moving average at 40, and so that would be kind of a level to watch. But you can see several times on the chart here how it how it sold down and then rallied back up. There's one. That was a really quick sell down, snap back. So, that's another potential one. Let's see. I'm just pulling these off the top of my head. Steel Dynamics, that doesn't look too bad. It's a pretty orderly little sell down, and then of just a real nice consolidation, like sort of a sideways consolidation here. So it's not a very deep sell-off. So I'm just pulling a few of them off the top of my head. Um, so we have a pending trade, and here's another one. This is materials mining. Yeah. So there you go. There's another one. And so just like I was saying about the energy sector, right now materials, mining, metals look like there's some stocks in there that are kind of setting up. I believe this has come down a little bit. The entries on these, they typically start considerably higher from the current price, and then they come down. So, but you can, without me, well, I guess I should move it. I think there we go. Let me fix that. Somewhere around here now would be confirmation. And see, that's the whole thing too. We're not trying to catch the bottom on something like this, right? Not trying to catch although, there's theoretically, when you see these, and there's been a lot of pivot lows lately. So, and a lot of times you don't get as clear pivot lows as like what you see here. But anyway, this thing could chop around, it could still go lower, it could move up and this and that, but what we want to see is, and I don't have the MACD on this, but what we'd want to see is in conjunction with like sort of MACD going positive, and it starts to cup up, and then we want to just try and catch it on the way up, right? So all this chopping around that it may do is noise, but then once we start to get a close, and it just so happens, it's a coincidence more than anything that 200-day moving average is right there too. And so it's not a bad idea, obviously, to wait for it to clear the 200-day. And you can see other periods of time where, it spent some time below the 200-day and then rallied back above it. But that's not really the main, trigger. It's just more of a coincidence than anything. But this is a great sort of swing trade pattern, right? If I drew a trend line down across these highs here, you'd see that like right back over here last week, there was a trend line break, and it's just sort of holding a nice consolidation pattern here. And then, this has been pending for a while too, and you just have to be patient with some of this stuff. In this market environment, I think patience is one of the things that's paying off, because there's so many stocks that have been crushed, and then people try and jump into them, and they rally for a little bit, and then they continue lower. So, speaking of commodities, this JO is also pending, and it's been pending for a while, and basically it's just chopping around in a big range here in the context of, nice uptrend. And then, of course, if I drew a trend line across these highs right here, you got a pretty nice little setup. As long as I'm here, let me go ahead and just draw it. Why not? Let's see if I can do that. There we go. So, I mean, this has got a pretty nice little pattern going here. There we go. Something like that. And of course, this is an ETN, so it's a little choppy the way that it trades, but it has a really good look to it, right? And so, who knows? It may spend a bunch of time chopping around in here, but if it's got kind of that W looking pattern to it, it's starting to theoretically. Now, of course, it could go back down, and it could, out in the future here, next month or whatever, it could be bouncing off the bottom rail. It could be headed down here to 55 or whatever and bouncing off this bottom rail. But in the event that it turns back up, then I think let's look at DBC. This is This is commodity tracking. Wow, I hadn't really looked at this. I was sort of expecting to see. Let me fix the chart here. Sort of expecting to see a little bit of a pullback here. Oh, fixed the chart too much. There we go. This is an interesting pattern here. This kind of looks like it just wants to bust out, right? All these pokes up here at this level. If you drew a straight line across there, it looks like it just wants to bust out, which is not good. I mean, this is not what we want. Here's wheat, the wheat. So some of these are starting to pull back. I don't know what to make about this, but I'm sure you've probably read that. Um, here's the thing about this. Look at where it came from. $7 and just had a super prices. The longer that these prices stay elevated, the worse off the consumer's going to be, because no one wants to pay more for the stuff that, look at this. This is, well, hang on. Let me just look at, there's no point in looking at that. Let's see, $ WTIC. That's it. There's your price of, your price of oil. So, no one wants to see the price of oil, up here over $100, because let's just go back here, because it's making everything else more expensive, right? I mean, look at this. Here's the pandemic sell down when everybody was, not going out and not traveling and locked down and all that, and so I don't even remember what that low was. I mean, the oil got down to very cheap, but it's not really about that. That's not really that's an anomaly. But here's what you got: is oil went from 25, and then it doubled to 50, and then doubled again to 100, and so this is just wreaking havoc at the grocery store, and the world runs on energy, right? And so as long as this price of oil stays elevated like this, then all the trucks that move stuff to the stores that we pay for, the prices are going to continue to stay high. Here's the other nasty thing, a little point about inflation and high prices is this. Is like when inflation comes down, that doesn't mean that they're going to drop the prices on all the stuff. And so, something that you buy on a normal basis, the price goes up and up and up and up because of inflation. And then when inflation comes down, the price still stays high. It just doesn't rise again as quickly. So anyway, that's kind of in a weird spot. The market itself is probably, well, I mean, people have been saying it's due for a rally, so you never know what it's going to do. It loves to do the opposite of what most people think it will do. But long story short, S&P 500 market overall in a clear downtrend, and probably due for a bounce, and headed into a 3-day weekend here. Over and under 4,000 on the S&P 500. There's a lot of resistance at 4,100. Let me go back to the SPX, because 4,100 is going to, if it gets up to 4,100, that's going to have sort of a W type of pattern. And quite frankly, there's every possibility that it finally sort of mounts a rally. But the wild card is the Fed balance sheet reduction, and that's that's something we'll get a little insight into, I guess, when the Fed minutes come out at 2. So, and other than that, there's a few sectors that show some promise, and everybody wants to be in energy stocks. Quite frankly, some of the energy stocks looked like they were ready to pull back, and then they didn't. They broke out, and so I had a feeling that there'd be some good setups, but instead they've just sort of plowed ahead because everyone's looking for, obviously, to put money into. Here's something real quick before I wrap this up. This is look at the damage in some of these mega cap stocks like Facebook, right? So Snap came out. I'm sure you heard about this. Snap came out and warned, and apparently, that affected all the other internet stocks, internet advertising type stocks, and social media stocks. And so Snap, just a disaster. Look at this thing. He's trading for $14 down here. And so, I mean, that's like down around the middle of the pandemic lows. So that's a lot of from $80 to 14. And so, Facebook cracked a long time ago, but market cap destruction here is significant. And then, of course, Google is also taking it on the chin here. Google was always one of the safe FANG stocks, right? And so it's just sort of a mess out here. And even Tesla, right? Tesla looking kind of nasty here too. So these mega cap stocks, the generals, have started to crack. And if I'm not mistaken, Nvidia is coming out with earnings tonight. And Nvidia, one of the top performing superstar stocks of this cycle. I mean, look at what it did last October and so basically Nvidia's lost half its value, right? And it's tough for me to figure out how the S&P is holding up so well when so many of these mega cap stocks have cracked. But I guess, I mean, maybe, it's almost like Microsoft's holding the whole thing up. But even Microsoft's down significantly. So, I mean, if you took all those mega cap stocks and you looked at the percentage off the high, I don't really get how the S&P can still be less than 20% off of its high. Now, at the lows here, a couple of days ago, or I guess last week, that spike low, it did touch minus 20%, but man, I mean, the average stock is down way more than that. So I don't know, but anyway, headed into a holiday weekend, so I don't know what to really expect, other than probably, it makes sense to get a little bit of an oversold rally. That spike low from last Friday probably holds for a period of time, and so. I mean, if I had to guess, I don't like guessing, but if I had to guess, I would say that we're due for a little relief rally here going into the week, and then let me find my weekly chart here. Yeah, and so whoops, was that the chart I was looking for? No, that's the chart I was looking for. S&P looks like it wants to break this little streak of 7 down weeks in a row. Get a little rally up here. It's interesting to look at the weekly chart, especially, of course, it's only Wednesday, so anything could happen. But looks like we're going to have an inside week here, inside of last week. So that'll be a pretty good setup, because then an inside week like that, you'll have last week's high and last week's low will kind of be good points to look for a rally over last week's high or a drop below last week's low. So here's the thing, like I said beginning of the show, the last at least 1, 2, 3, at least the last 4 weeks in a row, maybe 5 weeks, the consensus was for a rally, right? They're wrong, and then new lows. And that's the other thing too, is these lows from earlier in the year, like the January and February lows, were pretty extreme, and a lot of people thought when those lows were in that was it. I swear every single uptick in the market, CNBC keeps asking somebody, and they've been doing this for, for weeks now. Is that it? Is the worst of the sell-off over? And so it hasn't been. And so, we get a little bit of a rally here. Everybody turns bullish again, and then, is that it? Is that going to turn out to be the low? It's hard to imagine with the path that the Fed is on and just with the current macro state. So we'll have to see. You could draw a fib from this low to that high, which I'm not going to do, and look for about a 50% retracement. 61.8 I think is the fib. So it'll be interesting to see, but I think a lot of people are in vacation holiday mode, I should say, going into Memorial Day. I know school's out and that type of thing. So, um, and I know I am. I love this time of year. Springtime in Florida. Can't beat it. So, anyway, thanks for tuning in, and I will see you guys back here next week, same time, same place.